Welcome to episode 63 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abest.
And I'm Jonathan Brown. Each week we bring one stock, one headline, and one reason investors should care.
This week, to shine a brighter light beyond the imminent SpaceX IPO, we're delving into a pair of small-cap stocks whose underlying companies are making their mark on the space technology industry by fulfilling pressing unmet needs.
A company that recently caught my eye is Intellistake Technologies Corp, ticker ISTK on the Canadian Securities Exchange. The company's co-founder and CEO recently published an opinion piece, which you can find on stockhouse.com, that said the potential SpaceX IPO reflects a much bigger shift toward AI infrastructure moving into space, given the physical limits of Earth-based data centers. Intellistake wants to position itself not as a competitor to SpaceX, but part of the underlying system aiming to provide the blockchain-based, quote, trust layer that verifies and secures AI activity in the orbital infrastructure that companies like SpaceX help make possible.
Okay, John, so just who is Intellistake?
Well, let me introduce you to Intellistake. They're a small Burnaby, BC-based public company with a market cap of just 52 million Canadian dollars. They focus on acting as the trust layer, like I said, for decentralized AI systems, running blockchain infrastructure that verifies and secures data and computations. It's extending that role into space through partnerships like Orbit AI, which wants to help ensure that future AI networks operating in orbits are transparent, verifiable, and decentralized.
Okay, but how does Intellistake compare to other Canadian space stocks we've covered in the past, such as MDA Space or Maritime Launch?
Well, from what I've seen, there's no direct partnership between Orbit AI or Intellistake to Canadian space companies like MDA or Maritime Launch yet. However, they operate in neighboring layers of the same space ecosystem, so they could become indirectly connected as the industry evolves. They could also become indirectly connected through the value chain, launch to satellites, to computing, to data verification, that kind of thing. So, for example, Maritime Launch could one day launch satellites similar to Orbit AI, and MDA could overlap on satellite technology or components.
Okay, so John, both MDA and Maritime Launch stocks have rallied this year, so I have to ask you, how has Intellistake performed?
Well, we are halfway through the year right now, and the stock has lost around 70% of its value, but you could interpret that as a savings, as it is still trading more than 160% higher than where it was this time last year. Since April, ISTK stock has traded at between 40 to 50 cents. Intellistake's year-over-year stock rise, from what I've seen, seems to reflect strong investor excitement around its AI and blockchain and space infrastructure narrative. However, this sharp drop this year likely comes from profit-taking, broader market pressure on speculative small caps, and a reality check on how early-stage, execution-dependent the company still is. So now, Trevor is going to tell you about another stock that offers exposure to the space economy, also by focusing on the underlying infrastructure and emerging technologies rather than the operating launch systems themselves.
That's right, John. My space stock to watch is Seraphim Space Investment Trust, ticker SSIT on the London Stock Exchange and SSITF on the US OTC, market cap £610 million. And Seraphim is actually the world's first listed space technology fund, offering investors a high-conviction, diversified alternative to single stock selection for those looking to increase their interstellar exposure.
All right, so with all the hype around the space industry right now, given SpaceX's likely trillion-dollar debut, why is Seraphim deserving of investor attention?
Simply put, John, the fund's portfolio of 18 mostly growth stage and privately financed space technology businesses is the only such grouping available to retail investors today, touching on cutting-edge technology spanning communications, defense, security, climate monitoring, and sustainability. Highlights include Leo Labs, whose space mapping service can detect objects as small as 2 centimeters as far as 1,000 kilometers away, and Hawkeye 360, whose satellite constellation can capture radio frequency signals and is currently aiding in the identification of illegal fishing vessels. According to Seraphim's latest investor deck, which I'll link in the show notes, the company held £22.1 million in cash as of December 2025 to strategically put to work in an opportunity pipeline that is experiencing substantial growth.
Hmm. Well, that makes me think differentiated exposure is one thing, but differentiated financials is, where real value is created. Do you think Seraphim would appeal to investors, who demand solid fundamentals before putting dry powder to work?
In my estimation, it certainly would. Considering that the fund's portfolio grew from 71.8 million to 331.6 million pounds over the 6 months ended December 31st, 2025, with 70% of the portfolio by fair value fully funded and more than 85% projecting to be EBITDA profitable in 2026. While the norm for venture stage businesses is to invest in profits expected years down the line, Seraphim has managed to build a portfolio where operational cash flow is both visible on the horizon and widely shared, making a strong case for the fund continuing to create shareholder value over the near term.
That just leads me to my next question, which pertains to Seraphim stock price. Gotta know, how has it looked as of late?
Well, while the phrase, John, exponential returns is thrown around a bit carelessly in the small cap space, it certainly applies in this case, with Seraphim investors enjoying about a 250% return year over year, and leadership confident about capitalizing on continued industry momentum as the year unfolds, driven by elevated geopolitical uncertainty, highlighted by conflict in the Middle East, US and European space-related defense investments, as well as a growing investment opportunity pipeline supported by strategic government and institutional customers.
For investors keen to continue their due diligence, what should they look out for in terms of Seraphim's next catalyst of note?
That would be the company's fiscal Q3 results, which are slated to hit the wire on June 3rd, just after this podcast goes live. And they are rightly generating a considerable amount of excitement as the company's market cap has almost doubled since publishing its last financials up to December 2025.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Intellistake Technologies Corp. And Seraphim Space Investment Trust, PLC, and is intended for informational purposes only. For full disclaimer information, please visit stockhouse.com/legal/disclaimer.